Yeah, that's a great point because it's like a gut check. And it's mentally draining, right? To see those losses. And you'll believe it's crazy how cathartic it is when you press that sell button. And, I don't know if I don't know if the same thing you experience the same thing, Joe, but I know when I clean house in my portfolio, when I go through and I find a bunch of stocks I want to get rid of, it, by the time I've clicked the sell a couple times, those other sell buttons, I'm just
They're
man,
so easy. Yeah.
so easy. It's like gone.
Yeah, I'm actually I was looking at one of my holdings today that I bought. When did I buy it? I can't see it on the screen. Anyway, Ollie's Bargain Outlet, symbol OLLI. And at the time it was high scoring in our research. And to my knowledge, it's definitely not on the top list anymore.
No.
What do you know what its score is right now, Todd?
It's got to be just based on looking at the money flow. I just pulled up the chart really quick, and you've got tons of sell volume over the
Yeah.
last 90 days. And that thing, just based on that alone, tells me that at best it's a neutral, and it could be even worse than that because it's now probably more than 5% below its 200-day moving average. And that's where we really start punishing it with the score. That's one of those weird stocks, though, that I feel like has these huge moves and then these up, and then it'll go sideways for a little bit, and then it'll have a huge drop, and then go sideways for a bit, and a huge run. It's almost like one of those stories where you can say to yourself, okay, how much conviction do I have in Ollie's army? And maybe at this point, I'm just going to ignore scores, I'm going to ignore the chart, and I'm just going to look at the fact that this company has enough room to build. I don't know, but 300 more stores or something like that. And they do have a relatively passionate evangelical style of following. And, if your assumption is that, people are going to go back out and start shopping in physical stores again, to that point, Joe, just because a score falls out of the best list or just because a chart is broken doesn't mean I'm going to sell it. You just have to decide whether or not you want to be whether or not your conviction in that story, right, is high enough to warrant you keeping it relative to your alternative choices.
Exactly. That's where I'm at right now. And it seems that every day I open up my Fidelity terminal, it's close to the bottom of the list. Today, again, down 2.5%. I'm looking at it right now. I'm down almost 20% on it. And I'm just thinking to myself, I don't have enough cash available to buy some things that I want to buy right now that are high scoring in our research. And there's definitely a good chance on Monday that I might cut it loose. We'll see what it does.
Can I share my screen real quick? Because this could be actually pretty instructive. Actually, it's not a bad one to look at real quick. Joe, you can see the screen okay?
Yes, I can.
All right, so you look at all these, and let me tell you how I would play this out. Listeners, we do post these to YouTube so you can see the charts. If you're on Spotify, Apple, or one of the other great podcasting platforms, I'll do my best to walk you through it. The stock has pretty much gone sideways since last September in that $90 range up until, probably the end of April when it actually traded back below the 200-day moving average and broke through. So, Joe, the kiss of death for me is when you break that 200-day moving average and the 21-day and the 50 are both below, right? So that should have been a lot of support. An uptrending 21, the 50-day could have curled up. It was above the 200, yet it failed and broke through. So now you've got all of this resistance here at the 21-day, which now has crossed over the 50-day, is tracking lower. The 50-day, which is now rolling over. The 200-day, which is probably going to roll over. The other thing I'm looking at here, though, Joe, is I don't know if you can see this kind of orange bar across the bottom. If you connect that low of 76.74, which is pretty right at the bottom of this saucer formation, and go across, we're challenging that today.
Yep.
My expectation, or what I'd like to see, would be a rally off of this point back into the low 80s. And then if it was my money and I had done my work and I decided, you know what, I got other names I want to own, I'm going to make Ollie's be from Missouri and prove itself before I'll go back into it, I would be selling that rally. So if that 21 days rolling over here and the 50 days rolling over, we get that bounce off of this channel, bottom of the channel here at 76.74, close at 76.30, something like that. We rally back up. I'd probably be looking to exit somewhere in the 80s if I had a better idea. that I wanted to be invested in, because to me, that's a high risk reward trade. The assumption they can clear all of that resistance and then get out and then break out to new highs certainly can do it. But I would view that as a relatively high risk to reward scenario. So I would be looking for a more favorable setup, unless again, I had really, really high conviction in Ollie's army.